Robin and Chuck, you accurately pointed out that there were some numbers in the MD&A that were not tying to the main financials, and a large reason for that was because of the updates. And therefore, when we resend those to you, you'll have those numbers and as a reference. So I don't know, as a summary, maybe just kind of walking through the MD&A with reference to where the pages are in the CAFR would give us kind of a broad overview of the financials, and then we can dig into detail. So I'm going to share my screen here.
Great.
Okay. Can you see this?
Yes.
Okay, perfect. Okay. And you'll see to the left all the comments. We were tracking changes and whatnot, so disregard those for now. But essentially, on a high level overview, the town's net position increased by about 5.7 million this year, and those are found on page 35 of the financials. The major drivers obviously were positive variances in the general fund of about $1.5 million, and we've talked about those in reviewing the financials, our historical high levels of tax collections, coupled with underspend. Primarily, we've talked about the Board of Ed underspending almost $2 million this year. Of that, $2,400,000 was transferred initially into the non-lapsing fund, and therefore their net of that, they ended up with about 1.7 underspend in total, but after taking out that 4,500 or so. And then we also had some very positive variances in the small bonded capital funds. Most of that is just timing. We get the bond proceeds and then we kind of spend those bond proceeds down, and therefore as a snapshot, as of June 30th, we had some unspent bond proceeds, hence that positive variances in the small capital funds. And then in our capital outlays, we did have net depreciation expense that took those down. We did see net principal activity of 1.1 and so forth. But that's kind of a snapshot of where we are, high level picture. Our property tax revenues this year were 141, a decrease from the prior year. Primarily, you recall that our sewer fund was a taxing fund, and then we switched to a fee fund, and therefore those revenues are no longer counted as tax revenues, and so that accounts for a big chunk of that. This year also, in adoption of the budget, the amount to be raised from taxation for the budget was actually decreased from the prior year, and therefore we also saw some of that as a factor for the reduction in the amount.
Where does the sewer revenue show up?
Let me see, and Joe, you're on the line. Is it in other revenues? Let me check page 35.
I'm kind of looking at what I call the income statement.
What page are you on, Chuck? No, follow you.
I'm just looking at exhibit, what is it? Exhibit, take my clip off.
The sewer fund's a separate fund from the general fund.
Exhibit B, I think it is. Exhibit B, I think I'm just looking there.
So page 128 is where you'll,
Where does it show up on exhibit B?
it's going to show up as revenue against public works.
Public Works, okay.
So it'll be
Thank you, Joe.
charges column for public works.
Okay, so that should show up. Okay, so that should be significantly higher, let's say, than prior years.
Yeah, it should be 1.7 million. I mean, that's the difference this year. So in that neighborhood of different than last year.
Okay, thank you.
So that's kind of the high level view of where we stood financially, and that's what we itemized at the very beginning of the MD&A.
Sorry, can you just go back to
Sure.
16? One of my points there, right at the top. And yeah, just put, so, I'm new to this and I don't know how much flexibility we have, but the MD&A is supposed to I think, as you explain it, walk one through the key points that are in the financial statements. When I looking at this for the first time, the town's net position increased by 5.7 million. Well, that's interesting. It's good it went up, not down. But looking at that, I don't know, did it go up from 3 million to 8 million or 303 million to 308 million? When you look at the funds on page 21, the general fund, etc., we say that it went up by so much from what it was last year to what it was this year. I mean, is there any reason not to give that in the financial highlights for our total position? So it's the 5 million is in context to what the balance is.
We could do that. Basically to just show what the prior number, I mean, Samuel, you do a population
Yeah.
increase. We went up 2% from this.
Yeah,
to
if
this.
you look at page 21, I mean, Bill, I know we don't have a lot of flexibility with the financial statements, the CAFR itself, because, there are generally accepted accounting standards. We have to follow those, but I assume we have, some flexibility in the presentation of the MD&A. And,
I think
it struck me reading that, and then I went to page 21, and you see, well, all the different funds. It says it went up by so much from what it was last year, this to what it is this year. That okay, thanks, Linda. Something to consider. It's my point there, but it's one of the more significant ones. Right, thank you.
I agree with
Thank you.
Rob. And just to add a little bit, I would, like on a lot of these things, I know me personally, I have a hard time following exactly where stuff comes from, because there are different numbers on different basis of presentation, budget and accrual and gap, and there's at least three I think that I know, and to be able to know where these numbers come from is sometimes challenging. So to the extent throughout that there can be, I don't know, some guidance, a roadmap that would kind of say,
Sure.
does this stuff come from? Because it's not for those that are not used to this kind of format and multiple presentations. It's difficult. I always look at stuff as being tied back to Exhibit A and B in the CAFR, which is basically the balance sheet and the income statement. And
Sure.
I think somewhere there's something that resembles a cash flow too. And I always think that that's what we're trying to talk about here. But then when we talk about the numbers and so on, they aren't necessarily that. And so it's difficult to, for somebody like myself, I'll speak for myself, it's difficult to just follow it. And it kind of has been. But I know that there's you're used to, and maybe the government world is used to looking at, different non-accrual numbers and maybe, other numbers and therefore, a lot of these presentations are that. For example, where it says conversion to accrual basis on Exhibit E, to me, that's just kind of confusing as to what are we really talking about here and how does it all fit in? But that's just me.
It's not just you, Chuck. I thought this was just me the first year, but you're saying a smart guy like you after 6 years is still struggling. So there's not much hope for me then, right?
I was interested in your reaction being your first year, because I've kind of gone through this for 6 years, and this is like apparently the way things are done, right? And it's just very difficult for someone like myself and apparently Rob to kind of follow it.
I agree. Can I make a comment? Linda, is $5 million the increase in the general fund balance from like 26 to 31 or?
No, those are all governmental funds. So not just the general fund.
All governmental
That's
funds.
everything.
Kevin, if you go to page 21, we'll get there. It talks about individual funds. You'll see the general fund increased by 1.5 million. The small capital bonded fund went up by 4.5.
So where does-
The
where's the
individual
$5
funds are
million?
detailed
If you go to,
further on.
Kevin, if you go to page, well, either 19 or 20, but I think on page 19, it's a difference between the bottom line, the net position, the 2 years, right, Linda?
Yes, and here's where Robin is referring to on page 21, where we break it down.
By individual fund, yeah.
21.
You see,
Right.
that's the sort of disclosure I was asking
Right.
if we could just push.
So if you look at the screen, here's where we break it down. The general fund,
position, where we say
1.5.
increase. Yeah,
Right.
So it's page 20 from the 191 to 196.
Yeah.
yeah, that's it. Yeah, that's what I'm asking to be put in the headline on page, whatever it is, first page. Just for context. All
Yeah.
right. I mean, Linda, thanks. I mean, as far as I'm concerned, we've spent enough time on that point.
The next page, that's right. I'll keep that. That's correct. Okay, just a comment that it's kind of, this, to start right off with something that talks about these conversions to accrual basis numbers and everything else, that would be something that is unusual.
Yeah.
Could we think about, next year, maybe having a supplement? I mean, the report's so long at this time, but would we be well served by having a few pages to supplement the conversion to the accrual, or maybe trying to explain some of these numbers? So, and I was wondering, Joe, how does this compare to sort of what you see in other government towns throughout the state? Are there better practices, the way to deal with some of this stuff?
This is pretty standardized. I mean, the issue is, as far as the government-wide statements, the government is not managing any of this. This is a byproduct of managing everything else in the back. So that's why it's confusing, is because the more debt service you have, that's an expense in the back, and it's not an expense up front. It reduces the liability. Same with capital assets. The more you buy, the better your balance sheet looks on an accrual basis. But the town is not managing any of this that way. They're managing the general fund and the internal service fund and everything else. So I guess that's why the explanation doesn't make sense, because like a private company, you're not trying to manage this balance sheet on an accrual basis. It's whatever happens is based upon policies and decisions made on a non-accrual basis. So that's why it's confusing. I mean,
Yeah.
It's so if the more you spend, so the $4 million of capital outlay, that a depreciation expense is just, your depreciation expense was higher, so it affects what's in the back. So there's two drivers to the financials. It's what's in the back and then the accrual conversion. So these really map right to Exhibit E, and it just kind of tells you what changed the expenses in the back. So general fund showed a positive operations of 1.6 million. But if debt service, net debt service is 1 million. So if you take that expense out, general fund would be at $2.7 million of positive. So it's explaining it, but I can think about how to make it clear, but it's just the two different bases make it confusing, because you manage.
Isn't it matter just, it's fund accounting, and fund accounting, when you start putting things in pockets and then you try to add them all together, it doesn't equal assets and liabilities as you would in a corporation.
It's really, again, how we treat long-term assets and long-term liabilities are different in the back, and you don't manage those, in the same way as a private company does. You manage them more for infrastructure and others. So the decisions are made differently. And so that's why it just doesn't line up with the way a corporate, looking at why did the corporation make a profit? is a lot different than why the government net assets or net position went up, because you're not managing to make it go up. It's just a byproduct of everything else. And
What would be one example of where there would be a difference in terms of buying an asset in a town versus buying an asset in a corporation?
the
I mean,
difference,
I understand the for-profit motive, but the for-profit is really just the result of the revenue. I mean, we could actually run the town for profit if we just double the taxes, but everything else would be the same. So I'm just trying to understand. I'm not challenging what you're saying. I'm you're the expert in this area, but I'm just sort of picking up on the psychology of when you buy an asset in the town, it's different than buying it in a company, and I'm just not sure why. That might explain a lot, actually.
yeah, I think it's because when you look at you're buying it out of the cap project fund, which it's an expense in the cap project fund. This is an expenditure. You spent money. It doesn't go to assets. So you're funding it, with debt or the tax fund. So you're raising money to do that, but it shows that as an expenditure in the back, and then depreciation is not even considered. So in theory, you would be raising enough money that you would be charging this $4 million, because you always want to have capital replacement. So a business thinks about it differently. I mean, asset's still an asset. It's more the conversion from general fund and capital, where you're making decisions by looking at how are we going to fund that? How are we going to manage that? And then when we come up to accrual, it's just if you happen to buy a lot of stuff that was capitalized, it reduces your expenses and it makes your government-wide statements look better that you had a $5.8 million increase in that position.
Yeah.
But nobody thought about that along the way. It's just a byproduct of other decisions. I think that's why it's confusing.
I might say it a little differently. I might say that, you're buying an asset, people in general, no matter where they are, should look at it the same way. I mean, you're spending money, you should get a return for it. I think maybe how we account for it might be, how we reflect that in the books and records might be different, but.
Right. And part of what you said there, you're not trying to get a return on the roads.
Right.
You're buying an asset for a different reason.
You're getting a return, just not as measurable.
Right.
Yeah. Okay, great. So,
Just
let's push through here, because otherwise, Linda, you want to take us? So I went to my agenda back up here. So
Sure.
we can go back and pick up, Linda, where you were, and just. So are you done with this?
Again, that was so basically I was just going to go back to page 19, where we kind of tie all the numbers, peeking back where Robin left off. So we summarize everything: the governmental activities, the business type, and our totals, and that's how you get the numbers that drive the net position. And as we go further down into the report, we break down, what are the individual components of governmental activities by fund, and we do the same thing for business types activities, and we get to the total, and we provide some of that summary at the bottom of page 19. But all of these detailed notes are in the notes section of the financials.
Yeah, and this is good, because this is really the only place in the whole document where you have comparative information.
Well, you look at did you get to the very end of the report? Last year we added 2 tables, but we did 3 years. So I'm going to change those and give you the comparative. Instead of 3 years, I'm going to just calculate the comparative. It'll be like the very last section, like the last 3 pages. So I'll convert those so that you will have that reference in a little bit more detail than it is here.
Oh, wow. Thanks.
Where are you referring to? I'm sorry.
Literally at the very end. So on
What page?
Last, right at the back.
163.
Oh, in the very.
163, 164 is a 5-year or 4-year.
So instead of giving you that the 5-year view, I'll give you the 2-year comparison, and then you'll have that data at this level of detail.
So you'd be eliminating 2 of the years?
Yeah, unless you want me to leave the third, but I thought the most important part was to give you that comparison, because these are not required. These I kind of put in because of the comments in the back past that there was nothing comparative, but these aren't calculating the difference. If you want, okay, just show the change column and then you'll have that detail right in the report.
What page,
I
Rob?
think that's a good idea.
Yeah.
We're on page 163.
Yeah, I just think that, and I know there was some comments in the past that put it, side by side, make it more comparative. So if you could leave the 4 years and just explain the change between the current 2 year, the 2020 and 2019, if you could do that, that would be fine. If not, I guess it's okay to eliminate 17 and 18, but I mean, I realize the balance sheets for prior years with
It's not bad. It is.
I don't know,
Yeah.
Chuck, anybody on the committee feel strong about it one way or the other?
No, I
I'm sure in
thought-
the past we've lobbied for
I thought it was
more
okay.
side by side comparison.
Yeah,
I thought-
I like Joe's proposal.
Which is, what do you like, Bob?
2 years.
Years? Okay.
And I think leave the 4 years, the table at the back. I mean, have both.
Well, I would have to do it in the back. So, because
Yeah,
Yeah.
okay.
I'd
Okay.
leave it personally.
Just explain it, just make leave a couple of years, leave the 3 or 4 years and
okay.
particularly on the, and then just explain the change in the current year.
Okay. Yep. I'll add the operating statement because that's not here, but
Yeah,
Yeah.
okay. So I'm going to get rid of 18 and add the government-wide operating statement because then you'll have
right.
that data here.
Rob, did you have a couple of things in the MD&A, or have we covered those?
Linda, you're just bottom of page 20 now. You're going to go through anything on 21? Because I have a point on page 21.
I'm on 21 now, so we can discuss that.
Okay. Sorry, right. Just show the bottom of the page. I think it's 21, small.
There.
Sorry, up a little bit. Yeah. So the general fund, the unassigned balance is 18.3. Okay. Sorry, just hold it still. Sorry.
Okay.
Hold it. Yeah. GFOA recommends 16.6, so we're higher than that. And then, yeah, you've highlighted it. The town will seek to maintain a healthy reserve. Okay,
I made the changes.
Okay, maximize with
Right.
what is maximized 2025, maintain a healthy balance as a hedge against possible future state funding. Yeah, that leaves it sufficiently vague. Okay, that answers my point. And Bill, I don't have anything else that I want to raise in open meeting on the MD&A from my side. Some detailed comments, questions, numbers I'd send to Linda, which she'll address separately.
Thanks,
I got
Rob.
nothing else.
Everybody else on the committee okay with that discussion on CAFR? We could go to the
I think we're
just
waiting.
disclosures, the COVID disclosures, and then we could talk about the audit adjustments after that. Everybody okay with the COVID disclosures?
I am.
Yeah.
Yeah, it was good. A lot of good stuff in there.
Yeah. Okay. So next item on the agenda, 2C, is audit adjustments. Joe, how do we do? Well, how do you guys want to cover it at the Board of Ed and also the town on audit adjustments?
Okay.
Or Linda, whoever going to cover it. Yeah.
If
No,
any.
you go ahead.
If
If,
any.
All right. I'm kind of getting that up in front of me here. I didn't get that printed. So we did, there were a few audit adjustments related to receivables. We did record the unemployment CARES Act grants. And
And those are,
One of the larger audit adjustments related to this year, you do have advanced tax collection. So that was something that was a little bit different. So you'll see that there's about $1 million, a little less than $1 million of advanced collections this year. So we had an adjustment to get that lined up in the right fiscal
But
year.
why are there advanced collections?
I think you changed your process to allow that. I mean, that it is a normal thing that does occur. Most towns have advanced collections if people want to pay early. You know, once the grand list and the rate book is all set, then the tax collection system has the capacity to process payments early. So
Good.
And
You just
that-
get that.
Joe, that shows up in that deferred category. Is that, that was one of my questions. It seemed as opposed to just a prepaid asset or something, it shows up in that deferred category along with pensions and all that stuff. Is that right?
Yeah, it's
Right,
unavailable.
on page 34.
Yeah. On the balance sheet, right? What I call the balance sheet.
Yes.
Because it relates to next year's budget, next year's tax levy. So the governmental accounting is it's unavailable for fiscal 20, and then July 1, it becomes available.
Okay, so it shows up in that category as opposed to just a regular asset.
Well, the asset's there, you have the cash, it's just, you didn't get the revenue. The revenue's,
Deferred revenue. It's deferred revenue. It's deferred revenue.
revenue in government, yeah, we have to call it unavailable, but yes, substantially, it's the same thing.
Okay, but that's what that is. It's just simply an advanced collection that we didn't have in the past.
Right.
So Joe, are there any adjustments here that, are concerning from a control standpoint? Anything that shines on the fact that maybe controls are weak in a particular area or anything?
No, there's nothing that a few of them were just, timing, like the receivable for the unemployment. We didn't learn about that till October when DOL put out what that was. So that's just something we booked. The advance thing was again something different. And so from a control standpoint, none of the adjustments are indicating any issues with controls. So it's just kind of more than normal stuff comes up.
So on the subject of controls, that's the next item on the agenda. On the Linda, you may or may not know the answer to this question. Maybe Tucker does, or Kevin. I understand that the town does not charge for parking right now during the COVID crisis.
Correct.
Yeah. What is the decision process? Who makes that decision? I'm not questioning the decision. I just want to know how decisions like that are made.
Board of Selectmen, Bill.
Board of Selectmen do? Goes to the Board of Selectmen?
On the
Park Commission make the recommendations, yeah.
Parking
Okay.
Commission.
Good. That sounds to be fine. Thank you.
And just as an FYI, we do plan to start charging again January 1.
Yeah.
Except
No, but that's I was
Except for
above our
community.
pay grade, but I just sort of what the process is. I went to feed the meter the other day, so to speak, and I was so sore, so I figured I'd ask the question. But no, I'm sure it's a good way of supporting the town, the commercial business in town, which we have limited ways of doing that, and it sort of makes a lot of sense. So we're just wondering what the process was from a control standpoint. Good. So,
Linda, I know you sent around, I think, internal control comments, right?
Yes, there were some recommendations.
Is there anything in there that's worthy of going through?
Most of those are, they're best practices. There was discussion on our asset, how we manage assets, which has been challenging. We had a plan to go to Munis, and we sent the contract through the Board of Selectmen. We hired a financial analyst who had that role in their job description. They were to begin working on that in March, and then that's when the COVID hit, and we were all working remotely, so we never had the time to transition as we had planned. And when we got back, it was time to do the audit. So we went back to the old way of doing the fixed asset. And so that's still in place. So that was a recommendation from last year that we were planning on implementing, but were unable to. So that's that repeated this year. There was another good recommendation of it is challenging when you have a small department, the segregation of duties. And now that we do have this financial analyst that's somewhat removed from the accounts payable process, we do now have an individual that can create a vendor and not be involved in the payment process. Now, we don't create that many vendors a year anyway. We do business with the same people, but that's a recommendation that we have somebody that we can pass that on to. And then the other one was related to how we account for sewer projects, and the recommendation was to create a separate sewer fund, which we will be doing. I believe we've already done. We actually went to the Board of Finance early on, and there is a fund created. We just need to start spending from that fund this year. So half of that recommendation has already been implemented. But other than that, and Joe can speak to those as well, but most of those recommendations we welcome. They're best practices and will get us where I think we need to be in terms of our financial management.
The addition of new vendors, even though you don't have that many, the whole vendor file is extraordinarily important in terms of avoiding future problems, so I'm glad you've done that. How does that impact the Board of Ed? Do they have something similar when they want to add a vendor? How does that process work?
Well, we separated those responsibilities. Yeah, we separated those responsibilities back in 2015. Our AP person used to do the same thing, both the purchasing and the AP. And we reorganized, and we have a purchasing coordinator who takes care of the vendors and all of our procurement.
Yeah. It's a good, without revisiting the whole question of, combining departments or anything, I'm not suggesting that, but this is probably a good example where, getting as far away from the accounting departments as possible is a good thing, and so maybe this was a good example where the Board of Ed could do it for the town, or the town could do it for the Board of Ed, or you just go with sort of outside third party, because if you can't open a vendor file, then you can't make an erroneous payment, right? And that's so important. So just as a thought, I'm not being critical of the comment or the solution. I'm just saying this is a good example of maybe we could next time things like this come up, look to either the school look to the town, or the town look to the school, or both, to try to solve these things. This is one of those really important areas. Anyway, but thanks a lot, Joanne. Thanks, Linda. How about on accounting and audit issues? Anything?
Chairman, sorry, if I may, just on the the comments on controls. I don't have that letter open in front of me. I did have a quick look at it. Linda, I think there was a point on bank reconciliations, wasn't there? In the audit letter on controls?
Mm-hmm. Yes, there was. With regards to the bank recs that you do in your department, Linda, for the Board of Ed AP.
Yeah. Okay. Chairman, I just wanted to say that, well, I'm the treasurer of one of the larger nonprofits in town, and the auditors made a recommendation a few years ago that the treasurer should review, and I agree with them, review the bank reconciliations every month, which I do. Make sure that, and evidence with a signature somewhere that I've carried out that review. I think that's a good practice. So I just want to, do we in fact reconcile every month, and does someone independent of the person who prepares those reconciliations just take a look at them? Because I think that's a good practice.
We currently do. Joanne, our controller, and Beth do the monthly reconciliation, and I review them. We have not been as efficient in doing that, largely because of COVID and having worked remotely. Yeah. And I think that's been pointed out as well. We are striving to get that done as close to the 30th as possible. But in the past, we've been reconciling those, sometimes 3 months after the fact. With the new person that we brought in, our financial analyst, he's actually now part of the reconciliation team. We are currently current. And so
Right.
moving forward, we feel like we're there. But I totally agree with you, Robin. That is something, it is a best practice to do that on a monthly basis. And it was pointed out by Joe and his team.
Okay, so it'll be fine going forward. Thanks.
Good, thank you. Okay, do we cover accounting and auditing issues? Were there anything that we should discuss? If not, we can move on to timing through the filing date.
And that would include any disclosure issues or anything like that. I think probably the main thing was the COVID, right? And I think that's well covered.
Well covered.
Good.
Okay.
When are we gonna file this, Linda? And what are some of the hurdles we need to cover between now and then?
Well, we'll bring the final documents. I believe we have a meeting in December of the audit committee. We'll bring it then, and then this does get presented to the town December 3rd. Thank you, Chuck. And then the town council meets on the 18th, I believe. Tucker can correct me. Once we've presented it to the town council, then at that point we have until the end of the year to get it filed. But at the time of presenting to the town council, these will be final financials, and we can file those at any point after that. And we will.
December 16th.
So
16th. Okay.
16th.
we'll get another draft with. I'll have, for example, now there's kind of nothing in the MD&A for the Board of Education and things like that. So we'll get and also maybe some of the comments that we had and so on. So we'll get a revised draft and we'll go through that. And then I think our plan is the next meeting we'll kind of make our recommendation that we, would recommend to the Board of Finance and the town council that they.
Yes. Our plan is to get you the updated with the revisions and edits no later than Friday of this week.
Right. Okay. So, congratulations. We're 5 weeks away from having to file it, so to speak, but we've got plenty of time to look at the drafts and so on. So for you and the entire team and the Board of Ed, in the midst of everything else you're doing, great to get. This is a voluminous report, not easy to do. So good work on everybody's part. Okay, with that, let's move on to item 3 on the agenda, which is the update on the COVID environment. Joanne, you want to cover that for the Board of Ed? Just give us a few words on the update on COVID item 3, and then we come back to Linda, and just in terms of impact and anything around reimbursement from the government.
Sure. So today, the Board of Finance and the Town Council have approved for us $1,953,041, and that has been fully expended. So those funds have been either expended or encumbered. We do have custodial support services that are encumbered through the end of the year and some building subs for teachers, but those funds have been committed or expended. We received a little bit over $250,000 in CARES grant from the federal government in 2 separate grant programs, one called ESSER and the other one CRF. And those were reimbursable grants. So we spent the money and then filed for reimbursement. So those expenditures have been incurred. In addition to that, we're looking into the year, and it really depends on whether or not we go remote or not. Last year, when we were out on remote, we didn't have operational expenses, which is really the source of how we had funds available at the end of the year. But at any rate, we will need to replenish during the year. And as we talked about last time, the heating is going to be a source of concern for us moving forward. But we're monitoring it very closely. We have a replenishment system in place where we take inventory every month and look at our usage so that we're buying in real time. But with that said, we are concerned about supplies out there. And, we've heard that, masks are going to be hard to get down the line and cleaning supplies. So Brian has asked that we purchase out 2 to 3 months. So we're going to do that with the next replenishment. But we'll continue to monitor. We do have areas within our budget that we're not going to spend because of COVID, Travel is a big one, and others. So we're going to monitor it. We're going to do our reforecast as we do every year for budget, and we'll project as best we can as to what we might need in the future, if anything.
Right. Joey, just two questions. The $1.9 million, which I understood, and I've seen a list of that, and the 250, are they additive in the sense that, was it $1.9 million plus 250?
Yes.
Yeah, okay. So that's what I thought. That's fine. And I mean, I know when I've managed through crises, a lot of the times we got the spending out in front of the approval process of the decision, which is, you know, particularly if you have a short-term crisis, right? I mean, you don't get everybody together and do a budget to deal with a crisis. You know, first you deal with the crisis, then you figure out what to. Just give me a sense as to how that is happening in a covert environment. I mean, it's almost been 8 months now. So you talked about buying ahead, so that's some planning. But is it a little chaotic, sort of on the ground in terms of? And I don't say that critically. I would assume it would be in terms of you got to get something done, and okay, and then how do we fund it? I mean, I assume there's some of that. There has to be some of that, right? You make a decision, and you have to backfill on it.
Yeah, there is some of that. I think that what happened, you know, it is 8 months into it. The 4 months in the last fiscal year, we were able to cover those expenditures. There was like 187,000 spent to get us through the year, but we had money in our budget, so we didn't feel it was necessary to alarm anybody in terms of financials. As we went into the summer, knowing that we had to really get out in front of the procurement stream, which we did, we were in close contact with Todd and the finance board. Met with him a few times. He was open to doing like gradually doing an appropriation, and then just basically said, listen, you need to get it done. You need to do what you need to do. We were updating him on what we were doing. And he said, come back as soon as you can when you have a number that we can talk about. And so that's what we did. And we had a few meetings or a few calls with him, and trying to keep him up to date as we moved forward. And we'll continue to do that as we move forward this time. And we're open to any process. We'll come every month if that's what the town wants us to do.
Yeah.
But, you know, I think it worked for us in terms of our planning, and we were able to make it happen. So we appreciate the support from the town. They've been great.
Good. Linda, how about for the town itself? Same question.
So, yeah, similar to what Joanne has mentioned. I shared with you what we've currently submitted to the various grant programs, FEMA and CARES, in combined between the town and the Board of Ed for the fiscal year 20. We have about 470,000 submitted between the two of us. Well, we're still waiting to hear. We haven't heard from FEMA what's eligible, what's not eligible, how much of this will actually get back. I've checked in with some other CFOs and finance directors around the state. From the ones that I've spoken with, they have not yet got any of this yet. We do have some receipts, like Joanne mentioned, some specific program grants that they've got. We've received about 30,000 directly from the Department of Health related to the health department. We did receive some nominal amounts for elections related expenses, but the bulk of these reimbursements we've not yet received. Year to date on the town side, and these are included in the financials that I sent you, we've spent about 350,000 on COVID related expenses just this year. And so we're tracking that separately. We have several separate accounts that track that, and we will be combining those and continue the process of submitting those in coordination with the Board of Ed to these two programs that we're submitting our expenses to. But that's kind of where we are with COVID on the town side. Good,
great, thank you. Joe, from an audit standpoint, I'm sure it's been a little bit more difficult than typical. Anything that you want to cover as it relates to COVID, the impact on the audit process, any concerns in terms of, you know, getting good quality audit done and so on?
And no concerns. You know, we used, you know, the portal, secure portal, to move things back and forth. I mean, it's not as efficient as showing up and being able to talk to people, but we were able to get whatever audit evidence we needed, and and the process, did move along, although slower. It's slower for all my clients. It's just a different information flow, but obviously we're in good shape now and got where we needed to be and got from an audit evidence standpoint, audit process, we're comfortable.
Good, good, great, good work. Okay, unless somebody has anything else, we'll move on to item 4. And Linda, maybe you could just, and then anybody can chip in, Brian or anybody else who wants to, just a quick update on both the projects, the library, the waiving status, bonding status, and then, any plans, any status of the bonding plans for the town going forward.
I'll jump in first. We are looking at the markets. We work with Raymond James and our financial advisors because of what's happening with the markets. We do have some opportunities that have been presented to the town for refunding for some potential cost savings. We have about $20 million or so that are available, that are callable, that we could refund for about a net present savings of 6%, which is relatively reasonable. I think the baseline, most towns look at anything higher at 3.5, so 6% is definitely good. And so we're looking at that. Ideally, it would be nice to do, as we've done in the past, we save on costs when we do the refunding and the new money issues at once, combined, because we go through the same process. And probably towards the beginning of the year, end of the year, we'll start looking at whether we do the refunding in combination with new money issues, or we just do the refunding first to take advantage of what the rates are doing. So that's kind of where we are with the bonding. The Board of Finance and Town Council have already approved several bond resolutions for the FY20 capital projects. So those projects are ready to go. We typically issue close to the time, either when the projects are ready to go and we know they're going to be done in 18 months, or projects are done. So that's part of that discussion. The library and Waveney are still, being discussed. They haven't yet been approved by the Board of Finance or the Town Council, but when they do, they'll definitely be part of the equation in terms of what we bond and when we bond for the new monies.
What is the rough magnitude of outside of the 20 million refunding of the bond issue that you are kind of thinking about?
Well, the Board of Finance has talked about, as far as guidance, not issuing more than we pay down. And so if you follow that baseline, new monies, you'd be looking at anywhere between 12 to 13 million to be within that guidance at any given time.
Linda or Kevin, when you have something like the library where the town contributes to, I want to make sure I'm saying this the right way, where the town contributes to the operating cost of the entity, does the interest rate the interest rate environment impact that at all, or is that just, I mean, they're not related because one is the reimbursement of operating expenses, but does the interest levels impact that at all when you write those agreements, or is it just simply a matter of the town will finance X% of the operating budget of the entity?
Currently, those are two separate, but I think we talked about this at the last meeting. There are opportunities where, as part of the library plan, they have a portion of those funds that they're going to go out and finance on their own. And in looking at that, we did see that there may be opportunities where the town could finance at a lower interest rate. And then the question is, because of that interest rate savings, can we use that to apply towards how much the town support? Could we get credit for that since we're saving them upfront? But those are just scenarios and nothing's been decided. But that's a scenario where something like that could happen.
I had forgotten we discussed that, or I don't recall we discussed that, but that does make sense. An entity like the library would have a higher borrowing rate than the town would have.
Mm-hmm.
Right. The spread is smaller now because of the rates, but there is a spread.
Yeah. Okay, good. All right. Anything else on that topic? If not, we can move on to the monthly financial statements.
Bill, I've got one question broadly. I asked it a few minutes. The town has gone through a process where we've had utilities installed to various homes. A lot of that was done by digging up the roads. The roads have now been repaired. Is that done? And what's the accounting on future costs that either will be covered by the town or covered by the utilities?
It's not correct to say the roads have been repaired. The state roads have been repaired. South Avenue and 106 are state roads. So the state required Eversource to restore those roads earlier than we, our MOU calls for restoration 3 years after the pipeline is put into a particular road. And so they have a backlog. I'm not sure if Tigers quantified the number, but based upon how old the road was, Eversource's obligation to pay us to restore the roads probably amounts to a couple $1 million. Lindsay, do you know if Tiger has a?
He does have a number, but I don't recall off the top of my head what that number is.
And my real question is, we do not account for either what the additional expense would be or what we have and contractually due from the utility. It will be accounted for as it occurs.
We do not account for it on the financials.
I think if I understand your question, you're saying if there's a difference between the cost of paving the roads versus the reimbursement from Eversource, is that difference recorded as liability?
That's part of the question.
Yeah.
Well, Eversource clearly has an obligation to restore, and they're going to allow us to restore the roads, and they'll pay us the money. With the state, they contract with the contractor directly. We're going to use our contractors as we normally do for roads, and they will reimburse us.
Kevin, a question. I noticed some of the roads in town. I'll take Wahackney. I mean, it's been put back to pretty good shape, whereas other roads are still, I call them, they've been patched and they're bumpy. So the question is, what condition is the utility required to reimburse us for? What I call major patching, or for actually paving and topping back over the roads?
Well, you'll notice in the case of Wahackney, which was an Aquarian Water Company pipe, not a gas pipe, they repaired half the road. Our MOU with the gas company of Eversource requires that they restore the entire road, which is unusual because the state requirement is that they only restore the half of the road that they disturbed. But you're right. I mean, a lot of the temporary repairs are poor, and we have to live with them for one or 2 or 3 years more. In some cases, they've gone out and improved the repair, the temporary patch. But because the residents have 3 years from the time the pipe is put in to install gas in their homes, the road is constantly being torn up for the individual installations. So that's why there's a 3-year window for them to continually disturb the road before it's entirely. And then there's the moratorium for I think 3 or 5 years after that, where residents cannot get gas if they didn't get it in the first 3 years.
That's okay. I think really what I was pushing for is, to the extent that the utility is going to reimburse us and the town is going to have actual expenses, is that a huge difference? And is there any accounting for that difference at this point? And it sounds like there is not.
There's no accounting. And Tiger, I think, has at least a mental on paper number as to what the estimated cost is. And I think it's probably on the order of $2 or $3 million.
Okay. That's all right. If that's what it is, that's relatively immaterial to the town. I was worried that we might have $10 or $15 million of liability that we haven't booked. That's not the case.
No.
Okay.
Linda, you agree with that?
Yes.
Thank you.
Okay. Maybe we could just, since we're going to be meeting in a month from now, maybe we could just get a schedule included in the package. Because that doesn't have to be, it doesn't have to be exhaustive schedule, but just give Tiger a chance to weigh in on it. Good. should we spend a little time on the monthly forecast, or the monthly statements rather, and the forecasting? Linda and Joanne, do you want to discuss that? And before we get to the last item of adjournment. Linda, you want to start us off?
Sure. I sent those to you via email, and I shared these in October. For those of you that joined the Board of Finance meeting in October, you've heard this spiel. But basically, we're trending where we anticipate to be trending. There aren't any unanticipated expenses. I've shared about the property tax revenues. Even though we did the 90-day deferment, our citizens didn't take advantage of it. So we are where we anticipate to be on taxes. I've talked about the COVID expenses, which are at about $350,000 this year. The only one revenue that I think is trending low, which we've talked about, is the parking revenue, but that is being offset by the positive property tax collections because of the 98.5% budgeted collection rate. So those were the major variances on the revenue side. And then on the expense side, we did the $1.5 million special appropriation for the Board of Ed for COVID, which is coming out of this year's fund balance. So that was an amendment to the budget this year for that $1.5 million expenses. But other than that, those are the only, I'd say, 2 to 3 items that are out of the norm, so to speak, for where we would otherwise be on the 31st of October on the town side.
Linda, do you know, I was asked, when I asked my question earlier about parking revenue, I was sort of thinking of, Elm Street and the parking lots, but as it relates to the commuter parking, has there been, we billed that and collected that? I think they do that in June. Is that pretty much been the case, or has there been refunds in that area, or has there been parking holidays?
We've deferred renewals for the year. We're now looking at perhaps March, but even that is kind of dubious. Darien declared that they would definitely do March. We're kind of assessing it as we go through the year. So it's conceivable we won't have commuter revenues for the entire year. If we
Kevin, did we do? I don't know if it gets billed once a year. I know it was. I pay mine in June.
We bill it once a year in June.
And
Right.
Did we actually collect it, bill it, and collect?
No, that's my point. We defer. We announced that we would defer until people return to commuting, but the lots are virtually empty.
Yeah. I know. That's sort of where it's top of mind. I happened to notice that yesterday. You might ask where I've been for the last 8 months. I've been locked in my house. I haven't seen the lots. But
Metro North also adjusted their schedule, so a lot of people are driving to Darien to the main line because we only have 1 hour service all day rather than the commuter hours in the morning and evening.
Yeah.
I went to New York about 10 days ago. There were 6 cars in that commuter lot.
Yeah. Okay. Well, I don't know. We'll when we come out of this, we'll see if we need a parking garage or not. We'll see what the predictions are of of all the things we thought about when we were talking about building a parking garage. I don't think anybody anticipated empty commuter lots, and whether in fact this is a short-term thing or a long-term thing, we'll see based upon populations and also how people work going forward. So great.
There are 2 silver linings, Bill. One, obviously, the real estate market has been hot as heck, and they just reported we were in the top 20 for suburban towns that picked up New York City residents. And secondly, I just realized this the other day that the telephone carriers are not spending now in the cities and focusing more attention on the suburbs where people are working at home. So hopefully we'll be able to make more progress on our cell tower deficits because they will have more money to spend in the suburbs than the cities.
Yeah. Hey, Kevin, by the way, I was acknowledging Brian earlier for the great work the school district did. Kudos to you on the cell tower. I don't know the inner workings of the town, the inner workings of cell towers, but I would imagine that my recollection was that was one of your promises when you campaigned, and I think you've delivered on many of them, including, well, I don't know if they built it yet, but congratulations, because I know where I live.
Thank you. Thank you. It's a real tough struggle because they take so long, but we're about to announce another one, and then we're going to come back with the plan we had before to have another western and central tower. we have to. I mean, one of the things the storm in August told people was how bad our communications, telecommunications are, including internet. Internet is a real problem for people. We
Yeah.
have to-
Yeah, in fact, I think I reached out to you myself and said, we're just 2 miles out of town, and we were without internet, without telephone for the better part of 10 days because the cell towers were out. And I think it was either AT&T or Verizon didn't have a generator on their tower, right?
Right.
We had it this week where I am. We lost power, lost internet, and we have no cell phone service. So you're dead in the water this week.
Well, that won't be the case going forward. Kevin's going to have all these towers plus generators
Yeah.
on, right, Kevin?
Yeah.
He promised the parking garage, but that's another story. Yeah.
Okay, Joanne, anything you want to add on the monthly financials?
Just briefly, when you take a look at our financial statements for the end of October, you're going to notice that we're about $1 million less at this point from when compared to last year. And just for as a reminder, we did take $2.6 million out of our operating budget for health insurance. We used fund balance to support that. So 800,000 of the $1 million relates to that. And then the additional 200 really are COVID related. We haven't been sending people out for staff development.
Right.
Our athletic program was refined considerably in terms of just the program and the expenditures associated with it. When you take a look, I have all the other funds in here. So you'll see the grant fund this month, the food service. The food service, we're at a deficit right now. And it's really related to the hybrid program we had when we started at the beginning of the year. Right. And so we typically do run a slight deficit at this point in the year because of salaries that are paid up front and based on our schedule and the restocking. So just for an example, last year at this time, we had a deficit of 107. Right now, the deficit is at 352. The good news is we do have fund balance to absorb it. We ended last year with 953,000 in fund balance. So we're looking at ways to turn it around as best we can and still service the kids. Facilities rental is pretty much non-existent right now. Our donations are still strong from our parents. The summer program last year ran a deficit. We knew it would. It was remote. And we had the same number of instructors. We didn't have the same number of participants. So we expected that. And then just finally, when you take a look at the Internal Services Fund, you're going to note that we carried over last year an additional $2.3 million. And the reason for that is the last 4 months of last fiscal year, medical services came to a grinding halt. And our claims went way, way down. The flip side of that is we're seeing an increase this year. When we got into the summer, the elective procedures started to take place. So we're monitoring that very closely to see, if it's going to balance itself out or if something's going to change again because of the resurgence of COVID. But that's about it.
Good. Thanks, Joanne. Questions? Okay, if no questions, Joanne, Linda, yep, go ahead.
Yeah, so Linda, we can probably expect to see another document Friday, you said?
Friday at the latest, yes.
At the latest, and could we maybe arrange that? That'll be the kind of the whole document again, right?
Yes, the MD&A, the transmittal, and the updated financials. The single audit stays the same. That there were no changes to that.
I don't know who might want a copy, but I know I wouldn't mind picking one up again downtown.
Sure.
I don't know if we could take a poll here and see if anybody else wants a hard copy or whether the soft copy is fine.
I'll try to get to pick up a hard copy. I didn't get to pick up a hard copy this time. I had to work off the soft copy, but the hard copy is easier to do if we could do that.
Rob?
Yeah, I will. You leave them with Pam, will you, Linda?
Yes.
All right, so that's
Okay.
3.
I'll pick one up from Pam later in the week.
George, I assume you'll pick one up.
Yeah, but I like a hard copy. All right.
And Ed, you're probably a soft copy, right?
A soft copy is fine for me.
Okay. So
Well, I could also arrange like we did last time. We could have them delivered. It's probably easier. I will get those to you.
I will accept that offer. Thank you.
That's fine.
All right, we'll get those to you.
Although that gives me an opportunity to get out, so.
You can still get out.
Well, what is the,
Go for a walk.
what is the, I want to make sure everybody's got the next date on the calendar. What is the date of the next meeting? It's December.
It's either the 3rd or 4th. I forget exactly.
I'll look it up.
No, I got it right here. Okay.
I think it might be the 4th. I'm not sure.
It's the 4th
Yeah.
at 10:30.
10:30, the 4th?
Yeah,
Yeah, okay, 10:30 on
subject
the,
to change.
great.
Yeah.
Okay.
The Board of
With
Finance.
that,
The Board
with
of
that,
The Board of Finance meeting then is shortly thereafter, I think. And then there's the town council sometime after.
Right. Board of Finance will be on the 8th, Town Council on the 16th.
Correct.
Okay.
great. Okay, if there's any other business, we can do it now. If not, we can adjourn.
Nothing for me.
I'm good.
Okay, thanks all. Appreciate your, your time and attention and all the good hard work on the part of everyone. Thank you very much.
Thank you.
Thank you.
Thank you.
Bye-bye.
Thank you.
Thank you.